After Jerome Powell's speech on December 18, 2024, the key interest rate was lowered by another 25 basis points. The current rate now stands at 4.25% to 4.5%. This would seem to be a positive factor for the crypto industry. Loans will become cheaper, which should lead to an increase in demand for cryptocurrency. However, the effect following the Fed meeting turned out to be the opposite. Instead of a rally, cryptocurrencies actually decreased in value. What caused such an unusual behavior in a crypto market? Well, this is the Eye of Crypto channel. My name is Anna, and today I will tell you what in Powell's speech might have instilled fear in crypto investors. The problem is that the Fed chair's speech is not just a statement regarding changes in a key interest rate. In fact, it is a rather complex address touching on many economic aspects. One of these aspects mentioned in the speech on December 18th was Bitcoin as a strategic reserve. Powell's response can hardly be considered reassuring for crypto enthusiasts. The Fed chair made it clear that at this moment they do not have the authority to acquire BTC. Moreover, the regulator has no desire to change the legislation to make this possible. Such rhetoric sharply contrasts with the statements of the newly elected President Donald Trump, who claimed he intended to create a strategic reserve of bitcoins. There is also no consensus in the legal community on this matter. It turns out that Powell's speech undermined crypto investors' confidence in Trump's campaign promises. It is worth noting that a strategic reserve refers to resources that can be released in a stressful economic situation. Other reasons can also be noted for why crypto investors are far from euphoric. The inflation target in the US is 2%. So far, it is unattainable. Moreover, in November, the figure even rose to 2.7%, up from 2.6% in October. Additionally, Powell indicated that future policy would be quite cautious, as it is necessary not only to reduce inflation, but also to maintain a balance of other indicators. The Fed is already expecting inflation in 2025 to be higher, up to 2.5%, than before Trump's re-election, and it was 2.1%. It is also important to mention that although the rate has been lowered for the third consecutive time, it is still relatively high for the US. From January 2008 to December 2022, the rate was lower. Thus, Americans can only had to adjust to this situation in the last 2 years. Furthermore, it should be noted that the rate reduction is happening quite slowly. While in September the Fed acted decisively and lowered the rate by 50 basis points, subsequent steps have not been as vigorous. A 0.25% cut is not perceived by crypto investors as something particularly positive. Such actions by the regulator aligned with the consensus forecast. In other words, the Fed's actions had already been factored into the cryptocurrency prices. So, we have clarified the reasons for the decline. Actions that may not seem clear at first can yield unexpected effects. The Fed's key rate cut did not lead to a market increase. This is far from the only instance of unusual behavior in cryptocurrencies. You can learn about other incredible incidents where expectations and reality in the crypto industry did not align by simply following the link in the description. But how serious is the scale of the current disaster? After Jerome Powell's speech, all but the stablecoin USDC among the top 10 cryptocurrencies by market capitalization have declined. The worst performers were the largest meme coins, Dogecoin, which fell by 5.46%, and XRP, which decreased by 5.61%. The best performer, excluding stablecoins, was BNB, which lost 1.68%. Were there any cryptocurrencies among the top 100 that actually gained in the last 24 hours? Well, yes, but there were only 10, one of which was the previously mentioned stablecoin USDC. In general, only 3 coins demonstrated significant growth: BitGetCoin, Pudgy Penguinus, and Athena. All of these cryptocurrencies gained over 5%. The remaining coins grew by less than 3%, which can be considered negligible for such volatile assets. The total market capitalization of the crypto market decreased by 3.18% to $3.53 trillion over the same day. It is also worth noting the significant decline in cash inflows into the spot ETFs for both Bitcoin and Ethereum. On December 17th, these figures were $493.95 million and $144.74 million, but on December 18th, they fell to $275.39 million and $2.45 million respectively. In other words, cash inflows into spot ETFs for BTC decreased by 1.8 times, while inflows into Ether ETFs dropped by 59 times. Thus, Powell's speech indeed did not inspire optimism among. However, it did not become a major problem either. The decline in all cryptocurrencies was relatively moderate. Additionally, the series of days with cash inflows into spot ETFs continued, although the size significantly decreased. So, could the outcomes of the Fed meeting trigger a deeper correction? That is unlikely. The market has already digested this information, and for a new upward or downward movement, it will need new catalysts. This could take various forms: political, economic, or innovative. Nevertheless, these are all topics for future videos, and if you don't want to miss them, or if you simply enjoyed this material, please subscribe to the channel, hit the notification bell, or leave the comment below. And that wraps up our discussion for today, and I really thank you for watching.